Have you ever wondered how multifamily housing developments are adapting to the current economic climate and what opportunities lie ahead? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy McKay. Let's get right to it. In today's segment, we're diving into some exciting news from the multifamily development world. According to a recent article by Yield PRO, Thompson Thrift, a nationally recognized real estate company and one of the leading multifamily developers in the United States, has announced the launch of its 8th multifamily development limited partnership for the year 2026. This new venture aims to raise approximately $230 million in total capital commitments from accredited equity partners. The partnership is set to focus on a portfolio of ground-up Class A multifamily communities located in dynamic growth markets across the country. 6 multifamily development projects have already been identified in Georgia, Idaho, Nevada, South Carolina, Indiana, and Tennessee, with construction funded by the partnership and Thompson Thrift as the developer. This strategy is part of their proven build, lease, sell model, which emphasizes capital appreciation and disciplined execution, having produced a 2.1 times equity multiple on full-cycle development properties with an average investment term of 35 months. Paul Thrift, the chief executive officer of Thompson Thrift Development, expressed optimism about the current cycle of multifamily housing, highlighting the attractive entry point for investment. Our pipeline reflects both the strength of the opportunities ahead and our confidence in our team's ability to deliver excellence, he stated. With demand for quality rental housing at record levels and new supply falling, Thompson Thrift is well positioned to capitalize on the next phase of growth. Since establishing its dedicated multifamily business unit in 2008, Thompson Thrift has reached over $6.5 billion in volume and developed over 90 residential communities across 23 states. Their portfolio offers 3 primary standard designs, providing construction efficiency and cost predictability, with a track record of delivering high-quality communities that provide a positive resident experience. Greg Fedorinchik, Senior Vice President of Equity Capital Markets, noted the uniqueness of the partnership structure, which allows equity partners to work directly with the developer, avoiding duplicative fees while gaining access to a clear, disciplined structure designed with their priorities in mind. Unlike traditional private equity funds, this limited partnership allows equity partners to work directly with the developer, he said. Thompson Thrift's approach centers around strong relationships with equity partners. Carrie Thrift, LaFay, Vice President of Equity Capital Markets, emphasized the trust placed by their partners, marking this as their 8th multi-project partnership. Together with our partners, we are shaping communities that create long-term value and make a lasting impact, she shared. The macroeconomic outlook continues to support strong demand for multifamily housing. With multifamily starts at their lowest in over a decade, combined with strong absorption rates and a widening affordability gap between owning and renting, Thompson Thrift views this as an ideal time to advance with multifamily development. Josh Purvis, managing partner of Thompson Thrift Residential, stated that the partnership is well positioned to deliver more than 1,800 thoughtfully designed apartment homes in high-growth suburban markets across the country where quality housing is needed most. This 2026 limited partnership represents Thompson Thrift's 8th multi-project equity partnership, building on nearly 40 years of success. Since 2010, the company has deployed more than $1.76 billion in capital, delivering strong risk-adjusted outcomes across multiple market cycles. The offering is being made exclusively to accredited investors under Regulation D, Rule 506(c) of the Securities Act of 1933, as amended. Thompson Thrift has also been nationally recognized this year with several prestigious awards, including the 2025 Top Workplaces USA Award and honors as a top apartment developer from the National Multifamily Housing Council. These accolades highlight their commitment to excellence and innovation in the multifamily sector. Next up, we have some noteworthy news from the multifamily sector in the United States. Marcus and Millichap, a leading commercial real estate brokerage firm specializing in investment sales, financing, research, and advisory services, has announced the sale of Deer Chase Apartments, a 288-unit multifamily property located in Noblesville, Indiana. According to the article by Yield PRO, this property was owned and operated by the original developer for over 20 years before being sold to a locally owned and operated company. This acquisition will add to the buyer's existing multifamily portfolio in the Indianapolis metropolitan statistical area, with a particular focus on expanding their presence in Hamilton County, one of the state's fastest-growing counties. Tony Rogers, Senior Director of Investments at Marcus & Millichap's Indianapolis office, emphasized the strategic location of Deer Chase Apartments. The property is situated minutes away from Noblesville's premier retail lifestyle center, Hamilton Town Center, and Indiana's premier concert venue, Rolfe Music Center. With the area's superior infrastructure and plans for future growth, Deer Chase Apartments is poised to benefit from robust rental demand in the years to come. Rogers, along with colleagues Aaron Karoiwa, Austin Meeker, and Teddy Kenny, represented the seller and procured the buyer for this transaction. The Deer Chase Apartments offer a mix of 2, 3, and 4-bedroom floor plans, all featuring private entrances, full-size washers and dryers, and exterior storage space. Built in 2004 on over 13 acres, the community includes a fitness center, swimming pool, sports courts, playground, and picnic area. The property is conveniently accessible from Interstate 69 and Indiana State Roads 37 and 38, with the 750-acre mixed-use development Saxony Village and various shopping and nature trails nearby. The Rolfe Music Center, just a mile away, and Indianapolis, within commuting distance, add to the property's appeal. Marcus & Millichap, Inc. House is a prominent national brokerage firm, publicly traded on the New York Stock Exchange under the symbol MMI. As of December 31, 2023, the company had 1,783 investment sales and financing professionals operating in over 80 offices. They provide comprehensive investment brokerage and financing services to sellers and buyers of commercial real estate, along with market research, consulting, and advisory services. In 2023, Marcus & Millichap closed 7,546 transactions, achieving a sales volume of approximately $43.6 billion. In our final segment today, we're turning to some exciting developments in the multifamily sector, courtesy of a recent announcement by Institutional Property Advisors, a division of Marcus & Millichap. They've successfully closed the sale of Midway Row House, a 158-unit multifamily property located in Dallas, Texas. This transaction highlights the continued strength and demand for multifamily investments in key urban markets. Midway Row House is described as a boutique asset with a unique neighborhood feel, situated in an urban environment. According to Taylor Hill, Senior Managing Director at IPA, the property's 107 townhome-style units, featuring attached direct-access garages, contributed significantly to the strong demand for this type of housing product. Hill, along with colleagues Drew Kyle, Joey Tuminello, Michael Ware, and Jack Wyndham, represented the seller and procured the buyer for this transaction. The property is strategically located near the intersection of the Dallas North Tollway and Interstate 635, just 10 miles from key areas like downtown Dallas, Plano, and Frisco. It's surrounded by major employment centers, including the Platinum Corridor, Galleria Dallas, Las Colinas, and Cypress Waters. The nearby town of Addison offers residents access to over 200 restaurants and entertainment venues, such as Vitruvian Park and Village on the Parkway. Built in 2023, Midway Row House comprises 107 townhomes, 51 flats, and boasts amenities such as an infinity-edge swimming pool overlooking the 2-acre Blue Lake. The apartments offer 9-foot ceilings, 8-foot entry, and patio doors, and come equipped with full-size washers and dryers. The average unit size is approximately 979 square feet, catering to a variety of tenant needs. Will Balthrope, Executive Managing Director at IPA, emphasized the expansive inventory of high-quality multifamily investment opportunities available in Texas. IPA provides local market research and sales expertise across major Texan cities, including Dallas, Fort Worth, Houston, Austin, and San Antonio, making it a valuable resource for investors seeking to expand their portfolios. Marcus and Millichap, the parent company of IPA, is a leading national brokerage firm that specializes in commercial real estate investment sales, financing, research, and advisory services. As of December 31st, 2023, the company had 1,783 investment sales and financing professionals operating in over 80 offices, closing 7,546 transactions with a sales volume of approximately $43.6 billion in 2023. As we wrap up this episode, it's clear that the multifamily real estate market continues to present lucrative opportunities for investors, particularly in high-demand regions like Texas. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy McKay. See you on the next one.